All right, let's dive right in. Today we are unpacking the huge and frankly pretty controversial moves happening over at BitMine Immersion Technologies. You know them as BMNR. They're making a move so big that it has everyone asking the same thing. Is this a stroke of genius or a complete disaster in the making?
And it all kicks off with this number, 50 billion. That's the new number of shares that BMNR is asking its shareholders to approve. And you can bet this is the single biggest reason for all the fear and confusion flying around right now. I mean, when you see a number with that many zeros, your mind immediately jumps to one thing.
And that leads us straight to the heart of the matter today. Is this just a recipe for massive value-crushing dilution, or is this a critical piece of a much bigger, much smarter master plan? Our job here is to cut through all that noise and really connect the dots for you.
Because here's what you've got to understand. This 50 billion share vote, it isn't just happening out of the blue. Nope, it is directly tied to another major move the company made just days before. These aren't two different stories, okay? They're two parts of the exact same, very aggressive strategy.
Just look at this timeline. It is fast. On January 9th, a new leader gets brought on board to execute a plan. And then, bam, just 6 days later, on the 15th comes the shareholder vote to give him the financial firepower he needs. This kind of timing is absolutely not an accident. It's a signal. It's meant to show they are dead serious.
So let's just tackle that big fear head on. To really get what's going on, we have to bust the biggest myth around this whole 50 billion number. We need to get clear on what words like authorization and dilution actually truly mean in this context.
Okay, this right here is the critical difference. Authorization, that's just asking for permission. Think of it like raising the credit limit on a card. It raises the legal ceiling on how many shares the company could issue, but, and this is the key part, it doesn't issue a single new share. Dilution only happens if and when the company actually uses that permission to sell new stock.
And then there's the other side of this coin. See, not all share issuance is a bad thing. If the money they raise from selling those new shares is used to buy assets that generate value faster than the number of shares goes up, that's what's called an accretive move. It means each individual share you own could actually become more valuable.
So the takeaway here is simple, but it's everything. The real debate isn't about the 50 billion number itself. It's about whether you trust the management to use that new flexibility in a smart way, which conveniently brings us to the guy they just hired to do exactly that.
So let's meet the key player in this whole strategy. This is the man whose very unique background seems almost perfectly designed for what BMNR wants to do. Some are calling him the engineer investor.
Meet young Kim. Now, in a really big move, he wasn't just appointed the new CFO, he's also the chief operating officer. And he was immediately given a seat on the board of directors. This guy's background is seriously impressive. He's a software engineer from MIT, has an MBA from Harvard, and has spent over 20 years in high-level finance. That is a rare combination of skills. And this really spells out exactly why they hired him. BMNR is a tech company, right? But its main business is accumulating a financial asset, Ethereum. So Kim's mission is to be the bridge over that critical gap. He's the guy who can analyze the technical side of their operations just as easily as he can model the financial returns. The whole point is to make sure every single dollar they spend creates the absolute maximum value. Okay, so why bring in a heavy hitter like Kim and ask for a 50 billion share authorization all at once? Well, it's because they're chasing a goal that is so incredibly ambitious, it demands a whole new level of leadership and, you guessed it, financial flexibility. It's a strategy that the company is calling the Alchemy of 5%. And there it is. That's the number that is driving this entire plan. BMNR has officially stated that its goal is to acquire and hold 5% of the total circulating supply of Ethereum. And let's just be really clear here. That is a massive, colossal undertaking. Pulling this off isn't just about collecting some staking yield. No, owning 5% of all ETH would completely transform the company. They would go from being just another player in the crypto market to being a foundational pillar of the entire Ethereum ecosystem. We're talking about scale, prestige, and a major voice in the future of the network. That's the alchemy part. But how on earth do they plan to fund an ambition this huge? Well, this is where the strategy gets really clever. They are basically taking a page from the playbook of a totally different industry, energy pipeline companies. So let's break this playbook down. Step 1. Get that shareholder vote to authorize the shares, which gives them the flexibility. Step 2. When the market conditions are just right, they issue some of that stock to raise cash. Step 3.
they immediately use that cash to acquire more assets that produce income. In their case, more Ethereum validators. The whole idea is to create this virtuous cycle where the income from the new assets grows the value for every single share out there.
And that's it. That is the whole game right there on your screen. This is the single metric that will decide if this is a success or a failure. Young Kim's one job is to make sure that for every new share they issue, the income they generate from staking goes up by an even bigger amount. If he can pull that off, every single shareholder wins. Period.
But wait, there's one more layer to this whole story. There's kind of a hidden message tucked away in the company's official reasoning, and it might just be the biggest signal of them all. It completely reframes this entire move not as one of necessity, but as one of extreme confidence.
Just take a look at this quote from the chairman, Tom Lee. He flat out says that one of the reasons they need this huge share authorization is so they have the ability to do stock splits in the future. And why would they need to do that? To keep the share price from getting too high for everyday retail investors if Ethereum rallies sharply.
And that leaves us with one last, really provocative question. Management isn't just asking for capital here. They are literally structuring their entire company to be able to handle a stock price that they think is going to follow a massive surge in their main asset. So maybe this 50 billion share proposal isn't just a financial tool, maybe it's a signal. And the real question isn't about dilution anymore, it's what kind of bull run is BMNR preparing for?